JB here, JB here. Hope everyone's doing outstanding. This Thursday, October 2nd, 9:07 a.m. on this government shutdown day, number two. Talk really quick about the market. Some names I'm looking at go from there. SP futures in the green, looking to pad yesterday's all-time high close. S&P is up about 0.4% here, or S&P futures actually 0.3%. Nasdaq futures up over 0.6%. And just blue sky breakouts. Blue sky breakouts typically new highs, but get new highs once we hit this level. We'll see how all this plays out. Tomorrow's jobs report is the next uh, possible catalyst. With that ADP report this yesterday, you have to think the market's almost like wouldn't be shocked if it's a negative number tomorrow, right? And I don't want to see it on a horrible jobs report. Negative 150,000 jobs, uh, and then unemployment rate tick up to like 4.6%. To have a large surprise, huge upside surprise. I mean, in regards to the unemployment rate and a large downside number on the jobs created, and not only that, backward revisions. I wouldn't say that would be ideal, but to me, even if it's just weakness in the jobs market, just again gives more support to Fed Chair Powell's Jackson Hole speech and the fact that the jobs report is kind of like the jobs is what has the Fed on the path to continue to cut rates. So I think if that holds true, markets kind of find some footing here, and we'll see how things play out. Again, the fourth quarter is historically speaking 75% of the time it's green. On average, I think it's what 2.9% to the upside. So yeah, good stuff there. But I made that little meme yesterday. The wall of worry for the market, right? I mean, that's they always talk about the proverbial wall of worry. That seems the market always climbs it in the midst of all the craziness going on. I remember back in COVID, you're like, how's the market ever gonna recoup the losses? And then sure enough, 6 months later, markets are back on track. It just seems like there's always these catalysts in the midst of everything going on. You're like, wow, how is the market going to climb it? How's the market green today? I mean, especially when you're bearish, some of these perma bears. And then boom, yeah, then we move on to the next catalyst. But I just made the joke like the tariffs. I mean, it seems like eons ago that the tariffs are going to destroy the market, the economy. We're going to be in a recession. We're going to lose the reserve status. The U.S. dollar is going to lose its status. All these countries are pulling out of the U.S. debt. So and then who means the beautiful tax bill, right? That was going to destroy the economy. Nobody's talking about it anymore, right? The deficit and how much money is being paid to finance that debt. At some point, those things all come to roost, right? I mean, at some point that'll come back into the forefront. But right now, it's all about the government shutdown. So nice little chart here. Well, historicals. I love historicals showing previous government shutdowns. And if you take a look at just the last 7 or 8, and this is Clinton and Trump, well, the market has been up with these government shutdowns. So right now, only 4/10%. Yesterday was one day, but the one in 2018 was 35 days. Market was up 10%, right? So history is a guide. You would think it's bullish for the market, as crazy as that sounds, and as crazy all the headlines coming out. Now even Besson this morning saying, oh, it might hit GDP, right? I mean, you have to think there's gonna be implications, especially the longer it goes. But for now, just another one of those headwinds or potential headwinds, and the market's climbing. So that's kind of the overall market. This morning too, cracks are forming in the AI capex boom. I there's things that over the years that you look at and say, okay, maybe this could be the I wouldn't call it the canary in the coal mine because folks are talking about this, right? It's not like it's a um, something that's going to come out of left field, like the DeepSeek situation back at the start of the year. But to me, like this is a thing uh, you know, uh, over the weekend, if I get some more time, I got to kind of do a deep dive and just figure out how to play this, the timing, all that fun stuff. Because at some point, this comes to an end in regards to the capex, and it's like, okay, who's going to take the next leg? What is the next leg for the markets? And automation, robots, I don't know. So, anyways, that's kind of overall market. Yes, I was talking about in the SPY 660 to 667. Close over that 667 handle. We're at 670 here on the SPY. Upper Bollinger Band 671.53. So that'd be an area to watch here today. We're pretty close to it here this morning. And then, tomorrow's jobs report. Again, just even if it's negative, I hate to see negative numbers, bad data, but I think that'll just help ease concerns that maybe the Fed won't cut rates into the end of the year. So that's quick. So that's the overall market. Now, individual names. So I have the big circle jerk. That's what I'm talking about. I'll continue to coin that phrase for the AI capex situation and the circularity of the transactions, right, between all the companies. Um, but also you still have the AI, right? I mean, years ago, well, the first couple, maybe 2 years ago, you always had companies that were supposed to be completely disrupted by from AI, and there's some that there's truth to that, right? And there's some that there's not truth to. And I keep looking at Reddit as one of those that, and Google, like I said this yesterday in the last couple of days, Google has been always almost like the poster child of AI, right? AI is going to kill their search, which is their core business, and eventually, not they're going to go to zero, but their growth is done and whatever, and AI is just gonna take that, and that hasn't been the case. If anything, it's been a tailwind for them. So Reddit's a great example. But then you look yesterday and even the day before, it was like someone just decided, okay, we're gonna pick the names that have been discussed as possible AI disrupting names or AI disrupting the names and sell them off. It's like they went behind the scenes and just said, okay, we're all gonna do it on Tuesday and Wednesday, and you look at DocuSign first, and then you look at Wix yesterday. Obviously, Reddit. It's funny, Reddit, there's no analyst out defending it this morning, down 12% yesterday, lost whatever it is, 12, $15 billion of market cap. No one's saying a peep. Um, and then, take a look at Wix too. So it's just surprising stuff. Not surprising, but uh, ah. So we'll see how this all plays out. To me, I look at Adobe, and I was bullish on Adobe back at the end of last year as kind of like an oversold name, maybe overreaction to AI disrupting their business. And now the more I look, I'm like, maybe there's more meat to this, and maybe there is a possibility of that. I'm not saying that Adobe, you know, um, I just think there's an opportunity for more downside. You take a look at the chart on Adobe, that 330 handle breaks, then you got to think maybe 300 is coming. So I'm not putting my bear horn my my bear suit on per se on Adobe, but if there are some names I'm looking at as possible hedge plays and put plays going in the next couple of weeks and months, Adobe's probably front and center now. So Adobe opened slightly in the red yesterday, and then right after the open, boom, accelerated to the downside. It was 344, then 342. I took some of my puts, closed some out for 100% and over 150%. And then the last little batch when it hit 340, I closed out the last, well, not the last couple. I left a few runners. I just have a couple left, but I closed more out for close to 300%. And then I went and got some of the 330 puts. Now, for two reasons. One is I took some of the profits, so it's kind of like a freebie position. And then two is if there's continuation, I want to be in a spot where I can at least have locked most of those 337.50s in, kind of like risk free, and then still take advantage if there's continuation today. So today's a key day. It's kind of like trading exactly how it traded yesterday. We'll see how the open is. If there's going to be a sell off day two kind of situation, I wouldn't say day two because this will be the fourth day in a row to the downside for Adobe. It's going to happen right at the open. So if it starts breaking 340 at the open, I'll just hold the puts for a bigger move. If not, I'll lock the 337.50s and then see what the 330s are and maybe try and salvage that. But also continue to keep an eye on some longer dated strikes there on Adobe for some downside. So that's Adobe. GameStop. I was just going to talk about GameStop when it was at 28.30. It's actually just came under a little pressure here. I mean, nothing crazy, but it was gapping higher here in the pre-market. It was actually looking great yesterday, up 1.5%. And then I'm looking at the November 40 strikes, and they're slightly in the red yesterday, despite a green day. So nothing more frustrating than seeing your options in the red despite the market moving in your direction. So I passed on adding the 40s yesterday, and then sure enough, it gaps this morning. I'm like, I probably should have added them yesterday, but I'll be patient. Maybe at the open, I'll 40s or 41 November strikes, that gap fill 28.25. Got to think once that happens and that gap fills, it maybe 29.30 come very quickly. So that's GameStop. I don't know why I don't have my Nike chart. Here's Nike. Look at this Nike candle. You can't even, I don't know if that's a hammer candle, but all the way up to the 50-day moving average yesterday, found a little pressure, and then was chopping around pretty much for the entire day until the afternoon. And then once it broke 73.50 again to the upside, I got some October strikes. I think it trades up near $77 in the coming days and weeks. The thing with the Nike earnings, great report, right? The issue is guidance, and I think folks who are playing or betting on a turnaround wanted to see a little better in regards to the guidance. So I mean, you could take it both ways. To me, I think it's good to have conservative guidance considering what the stock has done over the last 5 years. So maybe there's opportunity here. So I'll be watching. I don't know even if I'll have a stop. Let's say find some pressure, breaks under 74 at the open. Maybe it gets down to 73.50 again. But I think it's trading north to 77 in the coming days. So got those strikes. I'll lock some in on the way up, cover costs, and ride the rest. And And then other names here. I mean, Duolingo, it had that W bottom, whatever you want to call it, the inverted head and shoulders. And then yesterday, similar to all the other names, the Wix, the DocuSign, just all of a sudden, someone hit a button and it sells off. It was 305, then boom, it's 293 in a flash. Uh, Again, here's another name that supposedly AI can disrupt, and maybe there's some uh, legitimacy in the claim in regards to maybe folks learning using tools to help interact in the real world for folks who don't speak the same language. You can make the case for that, but to me that doesn't eliminate Duolingo as a great business because it's a learning model, right? It's not a you're on the street and you want to translate model. So, and not only that, I keep talking about the addressable market that's going to be outside the language portfolio portfolio that they have. So I'll still watch this one. Premiums, I'm looking at the 360s yesterday. I'm like, they still have a decent premium despite excuse me, despite the stock being 15%, well, actually 20% from the expiration, right? So with a couple of days to expiration. So I'll continue to look for this one. Still love the story here. Just again, another name you look at and it's selling off in the midday. No news, no catalyst. Like someone hit a button and then you start scrambling. Did someone come out with a short piece? All right, so that's Duolingo, Wix, Reddit, GameStop, Adobe, Broadcom and Oracle. Again, two other names. I'm looking for circle jerk pullbacks at some point. Could I have went the other way on Broadcom and Oracle? Sure enough, I could have. And look at Broadcom's up $11 here this morning. But at some point, those are going to pull. And when they do, the premiums are not pricing in that kind of move. So they'll pay out handsomely. I think that's it. I'm trying to think of SERV Robotics is actually exactly at $12 here in the morning. I still like this one for upside. Not going to talk too much about it. Tesla came out with their deliveries this morning, right? I mean, it's people change their stories. Gordon Johnson, today's officially delivery day is like the Gordon Johnson, check on Gordon Johnson day because that guy, I think he has a $12.16 price target on Tesla. He's been bearish for decades, right? And I can go on rants for a while about Gordon Johnson, the fact that his dad works at Ford or was a executive, that, obviously he has some bias, not outside of just being an trying to look at the stock's fundamentals and things. He has a bias of, hey, I don't like Tesla, so I'm going to do everything I can to to get folks to short or what have you. But anyway, great deliveries from Tesla. And first it's about, oh, the delivery is going to stink. It's a car company. So if you're a bear, that's their bear case. Now all of a sudden deliveries beat expectations. Now it's going to be about their Optimus robot. Their rollout's not going to happen. How is any valuation of the company based on that whatsoever? So they'll just switch the narrative to fit their bear case. But good news there on the Tesla front. Also, 2 weeks, we get earnings. So Q3 earnings season should be fun. Let's have a great day. I'll be back on audio later. Rock and roll.